This quarter, Rambus took a very deep, long look at the equity markets, which is exactly what we need. That's exactly what we need. And it's fantastic. He takes us back to 1944. So, the blossoming of the black budget and the national security state, he takes us from the beginning the whole way. It's funny, I always agree with Rambus. He says the S&P has more room to run. I agree with him totally. He points out again, this is the most hated bull market in the history of the equity markets, which it certainly is, because if you look at how profits are being generated, we're generating more profits for corporate stocks in ways that are destroying the whole economy and society. So, yeah, of course, it's a hated bull market. I love going back to 1944 in the longest chart when he goes back the full way, because it really is a picture of what the equity markets have done during the unipolar model. So that's a picture of the equity markets under the leadership of the Anglo-American Alliance in the Bretton Woods model, in the global unipolar model. And part of a lot of the craziness we're watching is the people who manage basically the S&P are looking to keep those profits flowing by any means necessary. Now, what we saw in 2018 was really a big drop down, and the question was, is it a correction or is it the beginning of a bear? And if you look at where we are today, it certainly looks like it was a correction. And I think it reflects, among other things, the sort of the squabble behind the scenes to preserve the unipolar model. What's the fight about? The fight is about who's going to make money on the Silk Road and control the equity positions, as well as assert enough control of the oil markets to make sure that the dollar remains the reserve currency. Let's go back. For many years, China was basically buying our treasuries. We would take the money, hand it out, in welfare or Social Security. People would go down to Walmart, buy Chinese goods, and the money went round and round. Now, China, instead of financing our false prosperity, is basically going to finance the Silk Road and build out their own currency and bond markets and compete head on head. So this idea of who's going to control the equity and the flow and the profits on the Silk Road is unbelievably important. And of course, if you look at the struggle, it's not a national struggle, it's a struggle between factions who will use national interests and national armies. One of the challenges, of course, and the reason that inequality digs so badly is that if you look at who fights the wars and who makes money on the wars, they've become very divorced. So in World War II, if you look at who made money on the wars, that money flowed back to a prosperous middle class in the United States. Now, as Colonel Wilkerson has pointed out on the Solari Report, the vast majority of our Army comes from young men and now young women in 7 southern states. It's not evenly divided. And if you look at, they're doing the fighting and the dying. And then if you look at who's getting the fruits of the labor, it's a much smaller elitist group. I suspect that's one of many reasons that the U.S. adopted FASB 56, so they could basically channel money to mercenary armies and avoid the political pressure of asking a whole group of people to die when you're not sharing the booty with them.